Morning, Top Gun here, Thursday, April 1st, about 4:40 a.m. This is the YouTube pre-market commentary. All right, section 1, tech showing life. So yesterday the market rallied, led by technology, with the NASDAQ up 1.54%, the S&P 0.36%, and the Russell 1.13%. Now, within the S&P tech sector, the XLK, was up 1.59%. So it really carried the index. I don't know what the number would have been without tech, but it seems like it might have been closer to flat. So what was interesting about the S&P was that, as you can see in this intraday chart that I've created for the blog, is that it was trading above all-time highs for almost the entire day. In fact, it got about 20 points above the all-time high, so it seemed almost assured that we were going to close above all-time highs, and we entered the last minute, 6-7 points above the all-time closing high, and it just completely crashed, and we did not make an all-time high. We closed a couple points below it. Now you combine that with the strange action on Monday, where you had less than 35% of NYSE securities advancing, while the S&P was within 0.25% of an all-time high, which sentiment trader shows in this histogram is extremely rare, and that every time this signal has triggered in the last 30 years, the return has been negative over the following 1 month. So interesting for the S&P. Now, tech is a different story. Tech is starting to show some life. The NASDAQ bounced about 200 points yesterday, and it seems to be reversing that trend of value, the rotation into value, somewhat the last few weeks. Whether it's a bounce or a resumption of tech leadership is to be determined. So we've got some charts here from Ian McMillan, and then Scott Redler on the QQQ, and then Scott Redler on Google and Facebook, which he's constructive on, and then a chart from McMillan showing the NASDAQ breaking it out from the wedge defined by the trend line from the February all-time highs and the March correction lows yesterday. So the technical picture for tech is starting to look slightly bullish. Now, yesterday, I had, in talking about Prescott's March letter, A Collision of Macro Narratives, I had a chance to talk about the precious metals and how much pressure they've been under for the last 8 months. Now, happily for bulls like me, we got a nice strong bounce in gold above 1,700, and especially in the gold and silver miners yesterday, which were up 3-4%, which was a big move. And so gold is still hanging in there at the very last technical support, as you can see in this tweet from Greg Reben. And as I point out in the chart from Prescott yesterday, while price has gone down over the last 8 months, the fundamentals continue to be strong. And then, as you can see in these charts from Prescott, also of the CRB index being up 23% from its pre-COVID highs, and lumber hitting an all-time high for this tweet from Charlie Bolelo. Inflation is here, and so this is all bullish for gold. The price is diverging from the fundamentals. I think this is a great entry for gold, and I'm happy to have a large position in them right here. I will see you guys next week.